Most wealth-building content is either too vague to be useful or assumes you're starting from a position most people don't have. This video is different. I'm going to give you a specific 5-year plan, year by year, for someone starting with a W-2 job, some savings, and no passive income yet. Real numbers. Real sequence. No generic advice. The goal at the end of year 5, meaningful passive income from real estate, a side income stream from AI-powered work, and enough financial stability that your W-2 income is optional, not required. That's the target. Here's how to get there. First, why most people's wealth plans don't work. They start in the wrong order. They try to buy real estate before they have a financial foundation. They try to invest before the emergency fund is built. They take on debt to fund a lifestyle instead of investing. The sequence matters. Get it wrong and one setback, a job loss, a medical bill, a bad deal, wipes out years of progress. Get it right and each year compounds the one before it. Here's the principle: build stability first, then leverage. Every step in this plan follows that order. Year 1, financial foundation. The goal of year 1 is not returns. It's structure. By the end of year 1, you should have 4 things in place. 1. 3 to 4 months of essential expenses in a high-yield savings account. This is non-negotiable. Without this, every investment decision you make is contaminated by the fear of needing the money. 2. Retirement accounts maximized. 401k contribution to the employer match minimum, or beyond if your income allows. A Roth IRA funded. These are not optional. Pre-tax contributions reduce your W-2 tax bill immediately. 3. The 3-account system running. Operating account, reserve account, growth account, all automated on payday. The prior video in this series covers this in detail. 4. Your balance sheet in writing. Net worth calculated. Assets and liabilities listed. You can't improve what you haven't measured. Do this now and update it quarterly. What you are not doing in year 1, buying real estate. That's year 2 or 3. Year 1 is foundation. If your emergency fund is not built, you are not ready to invest in illiquid assets. Year 2, first passive income and accredited status. By year 2, you have the foundation. Now you start allocating to growth. First, if you're not yet accredited, meaning under $200,000 income or under $1 million net worth, your primary real estate vehicle is Fundrise. Open an account, start with $1,000 to $5,000, and set up automatic monthly contributions. You're getting real estate exposure and learning how to evaluate deals. Second, continue building toward accredited investor status. The income threshold is $200,000 individually or $300,000 jointly. Track your trajectory. If you're at $150,000 W-2, a bonus structure, side income, or a strong year-over-year raise gets you there. Set a specific target for year 3. Third, start educating yourself on private syndications. Not investing yet. Learning. Get on 2 or 3 operators' email lists. Read their deal summaries. Ask questions. By the time you're accredited, you should already know which operators you want to work with. Year 3, first private syndication. If you've hit accredited investor status, year 3 is when you deploy your first private syndication investment. Target, $25,000 to $50,000 into your first deal with a trusted operator. Not the highest projected returns deal. The most credible operator with the best track record. First deal is about learning the process and building confidence in the asset class. What to look for: operator with at least 5 closed deals and a track record that includes the 2020 and 2022 market environments. You want to know how they handled stress. An 8% preferred return structure. A value-add deal in a growing Sunbelt or secondary market. What you are not doing: putting your entire investment capital into one syndication. Maintain liquidity. The deal should be money you genuinely don't need for 3 to 5 years. Simultaneously in year 3, if you have a side income opportunity tied to your professional skills, consulting, content creation, anything, start building it. Keep it small. The goal is to prove the concept, not replace your salary. Year 4, stack and scale. By year 4, you have a financial foundation, passive income from real estate, and a developing side income stream. This is where the compounding starts to feel real. On the real estate side, continue adding 1 to 2 syndication investments per year as capital allows. Diversify by market and operator. At this point you should have quarterly distribution checks coming in, not enough to live on, but enough to reinvest. On the AI side income, this is where things get interesting. The side income model I believe in for W-2 professionals in 2026, AI-powered content and consulting. Specifically, 1. A YouTube channel or newsletter in your area of professional expertise. Content creates compounding returns. A video you make today still generates views and income in year 3. 2. AI automation consulting for small businesses in your industry. Every industry has businesses that need AI tools and don't know where to start. If you're ahead of them by 2 years, you're the consultant. 3. Digital products built around your knowledge, templates, prompt libraries, systems guides. None of these require significant upfront capital. They require consistent effort over 12 to 18 months. Year 4 is when you build the foundation. Year 5 is when the income becomes meaningful. Year 5, the transition point. By year 5, if you've executed this plan, here's where you are. Real estate, 2 to 4 syndication investments producing quarterly distributions. Fundrise portfolio continuing to compound. Total passive income, $8,000 to $20,000 per year depending on deployment amount. AI side income, a content or consulting business producing $2,000 to $8,000 per month if you've been consistent. Potentially more. W-2 income, still there. But now it's optional in a different way. The W-2 is funding the next round of investments, not covering basic survival. That mental shift changes every career decision you make. Net worth, realistically $200,000 to $500,000 depending on starting point and income level. Not life-changing yet. But the trajectory is established, the systems are running, and year 6 looks materially different than year 1. This is not a get-rich-quick plan. It's a compounding plan. The people who execute it aren't the ones who make the perfect investment in year 1. They're the ones who build the foundation, stay consistent, and don't blow it up by moving too fast. Start with year 1. Just year 1. Emergency fund, retirement accounts, 3-account system, balance sheet. If you've already done those 4 things, you're ahead of most people who watch this. Go to year 2. All the resources for this plan, the spreadsheet, the syndication operator checklist, and the AI income model, are linked in the description. Subscribe. The next series covers building the AI income side in detail, specifically how to build a content channel like this one from scratch, with no audience and no prior experience. Thanks.